Debt consolidation isn't just for people who are in deep trouble. It's for anyone who's tired of feeling stuck, okay? So if you're paying double-digit interest on your credit cards right now, you're throwing away thousands of dollars, okay? Let's talk about how a personal loan can change everything for you. So first things first, let's talk about what is debt consolidation and what does that actually mean? Because a lot of people are talking about it right now, but a lot of people don't know exactly what it means, okay? So debt consolidation simply means that taking multiple debts like credit card bills, medical bills, or even payday loans, or even if you have some personal loans, charge-offs, collections, whatever, okay? And you can roll that into a one single monthly payment, and that's gonna happen once a month, okay? So, for example, if you have 4 credit cards and let's say that they all have balances and they also have different interest rates as well, you can use the personal loan to pay all of them off at once. Now you only have one payment to worry about and hopefully at a lower interest rate as well. By the way, if you want a deeper understanding of how credit really works, I've got a free credit guide that you can grab, okay? All you got to do is scan the QR code right here on your screen, or you can go ahead and click the link down in the description below to get your copy. Now, why specifically a personal loan, okay? Here's why. Personal loans are typically unsecured, meaning that you don't have to put your house or your car or anything up as collateral. In short, you get a lump sum of money up front, and then all you have to do is repay it over a set period of time, like 3 years, 4 years, or 5 years, whatever works for you. And then of course, it's also going to be a fixed monthly payment, so you don't have to worry about the payment changing. So let's say, for example, you have $15,000 across credit cards, personal loans, whatever, okay? And let's say that they have an average of 24% interest. So your personal loan may offer you 10%, 7%, or even if it's double digits, that would make sense too, because that means that it could be a huge savings over time. And by the way, if you're considering using a personal loan to consolidate your debt, I found an option that does a soft credit pool, so you can check your interest rates and to see what the monthly payments are going to be without impacting your credit score, okay? All you got to do is scan the QR code right here on your screen, or just click the link in the description if you want to see what you qualify for. Next, let's walk you through the biggest advantages that you can expect when you get a personal loan, okay? Number one is going to be simplified payments, okay? Instead of like juggling 5 different minimum monthly payments on different days, you only have one. For example, no more worrying if you missed a payment because a bill got lost in the mail. Number 2 is going to be lower interest rates. If you qualify for a good rate, you could save hundreds or even thousands of dollars over the life of the loan. For example, if you're paying $300 in interest instead of $1,200 over the next year. Number 3 would be a predictable payoff date. Unlike credit cards where debt can like drag on, a personal loan gives you a clear end date. You know exactly when you will be debt free. But here's the thing, a personal loan isn't always the right move. High interest rate versus current debt. So let's say, for example, if your credit cards are offering a 0% promotional rate and the personal loan charges 12%, then in that case, you're better off sticking with your current plan, at least temporarily. Next is going to be bad spending habits. So let's say, for example, if you consolidate your debt and then run up the credit cards again, you're going to end up with twice the debt. So you don't want to do that. Another example would be when I work with the client and they consolidated $10,000 and then 6 months later, they had $8,000 in credit card debt plus the personal loan to pay off. Now let's get practical, okay? Here's what you should look for in a personal loan. Number 1 is going to be obviously a lower interest rate if you can, okay? For example, you want to aim for under 10% if possible, but compare it to your current interest rates, because sometimes it's not just about the interest rate. Sometimes it's just about consolidating everything. Like if you got 5 credit cards that are all at 20%, but you get one personal loan and that's at 20%, then that will make sense because now you only have one monthly payment. Next would be no prepayment penalties. So you can make sure that you can pay it off early without getting extra fees that ends up costing the entire loan more. Number 2 would be fixed rates that's not variable, okay? You want predictability. For example, you don't want your payment to jump $50 higher next year because of a rate adjustment. So you want to make sure it's fixed monthly payments. Next would be reasonable loan terms, okay? You want to pick a term that balances affordability and a quick payoff. For example, a 3-year loan would get you out of debt faster than a 5-year loan, but the monthly payment will be higher. So you got to make sure you can afford it, okay? Now let's talk about what you need to actually qualify for a strong personal loan. Number one, you need to know what type of credit score that lenders are looking for. For example, most lenders are looking for scores that are at least 640, but there are some companies that do offer some loans if your credit score is at least 580 or higher. Next, you want to compare lenders like the one I gave you earlier. Don't just take the first offer. For example, there are online lenders, that do soft pulls. Your bank may do it. Your credit union may do it. So again, make sure that you're comparing it to something so you're not just going for the first thing that you see. Next, use a loan calculator. The reason why you want to do this, you want to run the numbers. For example, okay, if you got a $15,000 loan with a 7% interest rate over 4 years, that's going to cost you about $360 a month. Consolidating debt with a personal loan can be a game changer, okay? But only if you use it wisely. Here's your action plan after you watch this video. Number one, list out your debts, okay? Write them all down by balances, minimum payments, and interest rates. You got to make sure that this is making sense and that you can get enough to cover all of this debt. Number two, get an idea of what your current credit score is. You can use this with either one of your credit card companies or Credit Karma or even any of the software platforms that we recommend as well. Number three, shop and compare personal loans. Don't just settle. See what the best terms that you can get. There are plenty of soft pull options out here like Avant.com, HappyMoney.com, and the list goes on. Number four, create a strict payoff plan and stick to it. For example, if you set up automatic payments so you never miss a payment, okay? Now, thanks for watching, and remember, your future is built by the choices that you make today. I'll see you guys in the next video.